And the first paper is Homeownership, Social Insurance, Old Age Security in America, in the United States and in Europe. And we have Stipica from the Urban Institute who's going to present, and Stephanie Moulton is going to be the discussant. Stipica. And you have to stick to your time.
Okay. Okay, good morning, everybody. So first of all, I would like to thank the SSA for funding this research on homeownership and old age security in the United States and Europe. And before I start, I would also like to recognize my co-author, Butrica. Where do I?
There,
Oops.
it's moving.
Okay. So we approached this research thinking about the fact that very few Americans, and same applies to Europeans, in fact have substantial savings other than their homes. And secondly, while homeownership has been a long time recognized as a source of rent-free place to live in old age, as well as a resource for some unplanned events, thinking of potentially health events. It is also true that in recent years and decades, governments have been increasingly promoting homeownership as a way of building assets, and some would also claim as a self-insurance mechanism for old age security. So with this in mind, we wanted to first compare trends in homeownership rates for older Americans and Europeans, as well as to compare some of the characteristics of housing-related policies across these countries, to examine housing equity trends among older homeowners in the United States and Europe. Thirdly, to provide a brief overview of equity release options and also to have an estimate of how much potentially homeowners could increase their household incomes if they would fully monetize their housing equity. So this would be an upper bound estimate. And finally, to discuss prospects and limitations of home equity release. So what are recent trends in home ownership? As we see between 2006 and 2012, the years that we focused on using the HRS for the United States and share for Europe, homeownership rates generally ticked up across almost all countries. And this basically is consistent with the notion that governments have been supporting homeownership. Now, that prompted us to look a little bit into housing policy characteristics. And in fact, what we looked at is, in the paper, I guess, is a bit broader and more nuanced than I'm going to show you today. But I just wanted to talk briefly about our general approach to looking at housing policy characteristics, as well as point out one of the findings. So basically, we focused on three key areas: mortgage access, direct government support for home buyers, primarily tax treatment of home buyers, as well as government support for non-homeowners. Now, we focused both on support for homeowners and non-homeowners, believing that together they affect housing tenure distribution across countries. So we created an index, and that goes from 1, the lowest, 3, the highest, across these three areas. And so what can be observed, for example, for the United States, is that it ranks very high comparatively in terms of mortgage access, in terms of direct government support for home buyers, but it ranks very low in terms of the support for non-homeowners. What are the implications of this? Well, it depends, but I just want to point out here that while homeownership rates among older homeowners have remained flat or slightly ticked up, Overall, home ownership rates in the United States have declined over the past decade, and that was driven by younger homeowners. And so with this policy mix that shows the biggest discrepancy between support for homeowners and non-homeowners, the US may have a policy mix that is increasingly underserving a growing segment of the population. So what are recent trends in home equity and housing debt for homeowners? Unlike home ownership rates, median net housing wealth for homeowners somewhat declined between 2006 and 2012. And there are two possible explanations. One, obviously, is the recession. And we see somewhat bigger declines in countries that experienced either longer or more pronounced recession. But the second possibility is also that there has been an increase in the proportion of younger homeowners who are reaching old age with housing debt outstanding. And in fact, this second explanation also finds some support because we see that housing debt prevalence among older homeowners generally increased across the countries that we looked at, and also loan-to-value ratios increased, most notably in the United States, where now the median is over 40%. Finally, when we look at the net housing wealth for homeowners, overwhelmingly it comes from housing wealth, roughly between 60 and 80% of the total. So what are equity release options for homeowners who want to access this wealth? And then what is the potential financial impact on older adults if they were to monetize their housing wealth completely? Among equity release options, there are some that people traditionally use, moving from a larger home to a smaller home, refinancing their mortgage, getting a second mortgage, selling property, leasing it back. More broadly, also transferring deed to a home in exchange for housekeeping or caring services often provided by family members. More recently, there have been dedicated financial products developed, including reverse mortgages and home reversions. However, these products so far have had very limited market penetration. Just for an illustration, in the European Union of the total mortgage market, only about 1% refers to reverse mortgages, and most of it actually originating in one country, the United Kingdom. If, however, as I said, homeowners would monetize fully their housing wealth, this is basically what would happen with their median household incomes. The increase varies across countries, going anywhere from about 20% in countries like Sweden and Denmark to effectively doubling in Spain, with the US experiencing about 1/3 increase. Another interesting thing to point out here is that even without annuitizing housing wealth, when we compare median household incomes of homeowners and non-homeowners, homeowners have substantially higher household incomes. In some countries, this difference is somewhat smaller, like in Spain or Italy, but in the United States in particular, it's very high. We also looked at the effect that monetizing housing wealth, annuitizing housing wealth, could have on poverty. And in particular, we focused on a measure of the share of population with less than 50% of median income before and after accounting for annuitized housing wealth. We see that it's pretty much by definition there's a decrease across all countries. However, what is interesting is relative differences. We see much bigger impact in countries like Italy or Spain, where even a low-income population often owns homes, and often they acquire those homes by inheriting as opposed to buying with mortgage loans. The opposite is true of countries like Denmark or the Netherlands. In the US, while the decline is fairly substantial, the interesting thing to point out is how big of a share of population still remains below 50% of median, even after annuitizing housing wealth, which just is another demonstration of the higher level of inequality in the United States. So what are the prospects and limitation of home equity release and asset-based welfare policies? So focusing on those dedicated financial products, some of the limitations that have been pointed out in the literature include objective limitations like high costs of withdrawing housing equity, uncertainty about survival, remaining years of life. In some countries, there is also adverse impact on eligibility for social benefits, in particular in the United Kingdom. And finally, although housing wealth is generally more equally distributed than non-housing wealth, it is still concentrated among the population that is less likely to need to tap into home equity to support their retirement security. In terms of some of the subjective limitations, there is general aversion among older age population to incur additional debt in old age. There is a different, often very emotional attitude toward housing as opposed to other types of wealth. And this makes perfect sense. These are not just houses, these are people's homes. These are places where life happened, where children grew up, where memories exist. So this is not how we treat our savings accounts. A bequest motive, it's present across all countries, arguably across some more than the others, thinking of, for example, Mediterranean countries, and especially since the onset of the Great Recession, there has been an increased lack of trust in financial institutions. So does this mean that dedicated financial products for home equity release will remain limited? Well, we don't really know. It may not be the case. There is research showing that if some reforms would be instituted to these products, home equity, using home equity to support retirement security, in fact, could be an attractive option for a substantial number of older adults. And related with this, the potential size of this market is still very large. A recent Urban Institute study showed that households ages 65 and older could potentially access north of $3 trillion in net housing wealth. So if we think about that, accessing even a fraction of that could still have a substantial impact. Furthermore, as our work and previous work shows, differences in housing wealth and income distribution are still sufficiently large that if we account for home ownership, that could reduce income inequality and poverty rates. Other way of saying this is that there is still a substantial number of people who in old age are income poor and, relatively speaking, asset rich, that this can be a useful proposition. Finally, some surveys, most notably in the Netherlands, show that older homeowners may be more receptive toward using housing wealth to both support their retirement incomes and in particular to pay for long-term care. Now, this is still a minority of homeowners, but it's a growing minority. On the other hand, however, what we don't know is whether younger Europeans and Americans will be able to build their home equity the very same way their parents' generation did. Here there are two issues. One is the issue of affordability, which may have influenced home ownership rates among younger adults in the US recently. and Europe. But also research shows that much of the increase in housing wealth came from increases in real estate prices rather than mortgage repayments. And what remains open for discussion and something to be seen is whether this trend can continue in perpetuity. And so I guess I will stop at that and leave you with that question to ponder. Thank you.